The market for electric cars is expected to more than quadruple in just the next 4 years. But the competition is growing by the day. Honda announcing today they'll change course and develop their own electric vehicles instead of using General Motors. And Electric Last Mile Solutions, an EV delivery startup, completed its SPAC merger today and is now listed under the ticker ELMS. But the legacy car companies like Ford, GM, and Toyota, well, they're all posting healthy stock gains this year as executives have clearly signaled their intention to go all in on the electric future. Ford is up 71%, GM's up 42%, while the EV plays themselves like Lordstown, even Tesla and NIO, they're all actually in the red since January. So is it the legacy players or some of the newer EV names that will come out on top in the long run? For more, I'm joined by Colin Langan. He's senior auto and mobility analyst at Wells Fargo. Colin, it's good to have you, especially after this run in Ford. Is that where you'd put your money to work?
Yeah, Ford is still our top name. I mean, I think they outlined at their investor day a very compelling electric vehicle strategy. They also outlined a very compelling big data and connectivity strategy. And they have great products coming. So the fundamentals are actually looking great. I mean, they have the Bronco coming out. They have the Mach-E.
Let me ask you about the debt, Colin, just want to make sure we can hear you okay. But for 15 years, the issue with Ford has been its high debt load. Is that still a concern for you? All right, we'll try again in one moment with Colin Langan here.
Sorry.
Colin, do you want to try one more time? I was just going to ask you about Ford's debt levels. As I mentioned, for 15 years, we've been hearing about this. Is it still a concern for the stock or no?
No, I mean, I think, they have slightly high leverage, but nothing compared to where it was in 2008, 2009. I think it's very manageable. I think they have the right plan in place. It's not one of the top 10 concerns for me at this point.
What's Tesla's future?
I mean, I think they obviously have they're leading right today in electric vehicles. I think that's sort of undoubted. If you look at sort of range per kilowatt hour, they're a leader there. I think we're seeing the traditional show that they're eager and ready to play, and I think over the next few years they're going to show that they can catch up. But Tesla clearly has some role in the future, particularly on the luxury side, in my opinion. I think they're dominating there, and that's where they're showing that they could be profitable.
Yeah, Daniel was raving about the Plaid, the driving experience over the weekend. So they are continuing to set the bar very high, even as the competition grows more intense. You like Ford, you like GM, who else? And what about this crop of new EV plays that's come to market?
I mean, I think people aren't giving the traditional auto companies a lot of credit. I think the U.S. companies in particular are very interesting, having covered them for over a decade and a half. I mean, when I started, they were obviously in decline. I think they understand better than most of the traditional auto companies the risk of being disrupted, because they've been disrupted. Most of the leaders have probably been at companies that were shrinking for most of their history. So they've been more aggressive, and it's showing, and I think they're showing some strong leadership here. So it's kind of an interesting time to cover the U.S. names. I think they're all doing very great. There's clearly going to be a role for some of the startups, but I think a lot are pretty high risk, quite frankly.
But what's the business model going to look like as these companies make this pivot to producing EVs, especially as the competition for the metals, the materials, and all the rest of it that goes into making them is growing and pushing up those prices every month, it seems?
Well, definitely. I mean, all the irony about all the EV excitement. I mean, a lot of it is excitement around government sort of support. We'll probably see, I think it was already pulled out of the infrastructure bill, but there's a large view that some of the EV support will be put in legislation later this year. And so we're seeing government support. But as you kind of point out, the raw materials on the battery side are up about $3,000 added, or at least added costs if you look at the raw material costs for EV batteries. So that, has actually been a step back. I think by the time you get to 2025, 2030, I think the expectations are we get enough of that supply online, the supply demand gets back sort of to a norm, and those prices come down. But it is clearly in the near term a headwind for EV sales.
Yeah, absolutely. Although, as you mentioned, the stock's more excited by the growth prospects than by the near-term profitability challenges. Final question is about Tesla and China. China, as you mentioned, contributed all of the company's global market share last year. Now there's another recall in that market. They're trying to kind of get behind their homegrown players. What does Tesla look like without China, or is that question absurd because they simply have to have China in order to justify the stock price?
I mean, yeah, I think you need China. It's a question of how much they could grow there. I think the brand is still very, very strong there, but it's something to constantly watch. The headlines over there have been a bit negative for them. They've gotten some bad press. Recalls, never help for any auto company. Doesn't seem like investors don't seem too concerned today about it. But China is an extremely important market for them. It's really the hub of where EVs are going to see the biggest growth, and so you want to have a strong position there because then that gives you scale for the rest of the world. Because really, if you go around the world, it's going to be China, Europe, and then the U.S. really is lagging far behind. So China is a pretty important EV market for sure.
Yeah, and again, to mention your Tesla price target, about $100 below where it is right now. You rate them equal weight. You've got Ford and GM overweight. Ford at 18, GM at a $67 price target. So that gives some sense of where the market is going from here. Colin, thanks for joining us. We appreciate it.
Shepard Smith here. Thanks for watching CNBC on YouTube.